I think the overall moment and opportunity in software, despite like all these crazy numbers and spend and everything we said, is like I would say even underrated. It's like and you
Mhm.
feel that if you have been in the space for a while because you know what was possible and where we were and what is possible today and how big the leap has been. We still haven't scratched the surface of what we can do with more compute. What if we go like even crazier? So all of that is happening. There's constantly new things coming out. There's a little bit of fatigue around that too, because eventually, if there's unless every time something new comes out, the leap is big enough, people just they don't even have resources to try enough things out, right? Because there's so much stuff. Like how many new model can you actually benchmark?
Hello and welcome to the latest episode of FUMO, Future Money with Gaurav and Ronit. We're doing this from three different continents this time. I'm zooming in from Prague, where I've been speaking at a conference in a lovely 16th century palace. I've got our special guest, zooming in from New York, probably some hyper advanced part of the city. Nare is going to tell us all about that in a second. And last but not least, my trusty partner in crime, Gaurav, who is somewhere underwater in Dubai. Nare, welcome.
Hi guys, thanks for having me. I'm
Did
indeed
I
in
get
New York.
did I get the name right? I know I asked you to
Y-
pronounce it, but I probably mangled it. Nare.
yes,
So
yes, it's Naré.
where in the world is Nare from, that name?
It's actually it's an Armenian name, very common in Armenia. But
Okay.
the actual where it stems from, I think in Arabic, nar means something like fire, and then there's a Persian version of it, which means pomegranate. So between the fruit and the fire, I guess somewhere in
Wow.
between. There we
So
go.
from the fruit and the fire to AI, right?
Yeah, yeah.
We're going to be discussing AI and applications of AI in financial services and building businesses and all of that good stuff, right, Gaurav? Nari,
Absolutely. Really looking forward to
Tell
it.
us a little bit about your business.
Um, yeah, happy to. Actually, it's really excited to talk about it because I feel like there's so many buzzwords and things we read these days. It's nice to have
Hmm.
like some real conversation. And I started the company 3 years ago. Uh, there's a nice version of the story that I was just bored during COVID, and I was doing a VC job. Also investing in early stage machine learning AI businesses. This was like the 2018-19 wave of companies, which, if we look right now, look prehistoric,
Yeah.
just because of what technology could do. But like they were born after the first wave of deep learning in 2017.
Hmm.
And the idea of Entropy back then was very simple. We thought um, there's so much financial data out there. It is underutilized because it's basically fragmented and very messy and hard to use. Bank transactions, receipts, invoices, like everything that happens in finance from the moment that you onboard somebody to the banking system, to the moment that you underwrite them for a loan or a mortgage, payments, all of those services use this data, but it's messy. So we decided to train models to solve that problem. That's the origin story of Entropy. Actually, we were building a privacy preserving layer to allow banks to do this themselves. Ended up talking to a bunch of banks. No one was interested. And they told us that data is messy. Just here's some data, give it back to us, but clean it. So we kickstarted like that. And today, we are not just training our own models to understand financial data, but as we were doing that, and as larger models were launched last year, particularly GPT-4, because before that, nothing really could perform on financial data. The like reasoning was good enough. We started focusing more. Okay, now we're going to have way better models than anything we can do in house or anybody can do in house. Just because the more compute you add, the better they become. But we can't afford them because they're expensive and they're slow. So we're trying to solve that problem, particularly for financial services and beyond today.
So the core of just unpack what's the core proposition that why does entropy exist? Like what do you do that wasn't being done a few years ago?
Um, Well, today our mission has evolved quite a bit, and we are focused on making sure that you can apply the best possible models, the larger models, to applications in financial services at scale, cheap and fast. I'll bring you an example why it's a big deal. If I want to classify 1 billion transactions, which is 1/10 of a volume of a medium-sized US issuer, it's nothing. With a GPT-4 size model, it will cost me $50 million today. This is a basic task that the models are very, very good at. Then on top of that, if I want to build a customer service agent that, let's say, responds to queries every time you call your bank and say, I don't recognize this transaction, we're adding more tokens. So it becomes even more expensive. It's prohibitive. To be able to realize the potential of AI, it's not just about training the best model. It's also about making sure that it can be deployed to this large volume data use cases and be affordable, perform, and be fast. Latency is another thing. So we are really focused on that. And it's an infrastructure business. So we never build end products, but we build products for other people who build on top of us, enabling them to do things better.
Got it. And who's building on top of you? Is it other banks? Is it other tech companies? Who's building on top of you?
Both, actually. Banks and tech companies. Our key sort of person we serve is a developer who is working with language models and is building products around it, whether it's anything to do with fraud or payments or, like I said, building a financial services customer support agent, a compliance agent, and so on. All of those are potential customers. Today, we're focused on bigger companies just because they have more volumes, so optimizations matter to them. If you're a tiny startup, you can get OpenAI credits and you can go for a while without needing any optimization at all.
And explain to the audience who are not familiar with AI as much as you are, why is it so expensive? You mentioned some numbers there. So just run us through what drives the cost and how you help reduce that.
Yeah, so there's two angles. I think this last wave of magical technology, right? This last wave of advancements was purely driven by scaling compute. So there was a paper that was published years ago at Google that started it all, called Attention is All You Need. And that architecture of transformer came about, which is what most of the models are today. However, what folks at OpenAI did, and this was like their bet, that was different from everybody else's, they said, okay, we're going to take that architecture and we're going to use as much compute as possible to train the model and make it bigger, add parameters. And they started to see that the more parameters they add, the better the model becomes, the more general it becomes. Before, we used to think if a model is specialized on a very specific thing, then it will be much more accurate and it will be more responsive and so on. But it turns out not to be the case. The bigger the model, the more the parameters, the better it is. Now, as that is true, it really relies on hardware. So you need a lot of hardware. You need the cycles of, we call them flops, right? So every time there's a question you ask to the model, it costs a certain amount of energy because of the hardware that's being used. So the end cost is actually electricity cost, plus obviously the actual cost of the hardware, but that's not that expensive. So because the demand is very high and the models are only getting bigger, these electricity costs then are reflected in what it ends up costing you as an end customer. People out there today don't realize how massive this is going to be and how important cheap energy will become in this new setup. I'll bring you an example. Microsoft this year has 50 billion in CapEx committed to AI. A lot of it is to train models, and a bunch of it is going to go to inference as well. Now, the difference between inference and training is, okay, you train a big model, great, you're done. You spend X million dollars, but then every time anybody uses your model, that's also energy. That's also data centers every time you ping the model. So with all of the big sort of players in the US, their electricity spend is going to be as big as all of the UK's grid, just 60 million people essentially using electricity every day for a variety of reasons. That's pretty crazy if you think about it. And it's only the beginning.
Sorry, just to that, you're talking about the AI driven energy or just in general the databases that these companies are running?
I'm saying that every time you use a model, it costs, the end cost is the energy cost to run these data centers. There's some hardware costs in there too, etc. But the end, like the real cost is the energy. That's why there's a lot of effort now to make the hardware more efficient so it uses less energy. There's a bunch of companies focused on that. I think Sam Altman and OpenAI recently invested in a company that just does sustainable and cheaper energy production. I do think the MENA region actually is in a very, especially UAE, is in a very interesting position strategically because of Masdar and like investments prior. If you can get cheap energy, you are like literally the best position. And if you make the right moves to also acquire the hardware to be a part of the story in a big way and win. I would say Europe and nuclear, but Europe's going to be regulating, and I would bet for a new energy source to come out of somewhere else before that happens in Europe. But what we do is we're basically saying it is crazy to think that every time Gaurav is pinging a bank customer service agent or is using his personal assistant or his AI salesperson or whatever else is going to be built in the future, every time that we have to use those flops, because there's going to be many questions, millions of questions, right? Billions. What we do is we take the answers that we have seen before that the model has produced, we store those answers, and then we predict what the next question is going to be. And if we find an answer from the data that we've seen before that's very similar and accurate before having to ping a model. If you do this well enough and if you have enough data, 98.9% of the time, that's our recent number, you don't have to ping a big model and you can get an answer. So you turn compute costs into lookups costs, storage costs, which is way cheaper, obviously. And that's our approach. Obviously, there's a lot of things that go in between. For instance, we run much smaller models, tiny models to figure out when you're asking a question or asking AI to do something to break it down into smaller tasks and run them instead versus doing the whole thing. But yeah, in essence, it's predicting what you're saying, how similar it is to what other people have asked, validating the output from what we've seen before, and then surfacing that versus calling a model and only having to call the model when there's no answer and you need something new or when you want to update a set of answers, etc. Probably easiest way to describe it.
So as currently configured, the hardware, you're looking at energy costs, electricity costs in the US for AI-driven models, the equivalent of the UK grid, you said. That's huge.
Yes, it's huge. Yeah. And that's why some people say, oh, is this a bubble or are we in a bubble? Because a lot of it is preemptive, right? People just buying up compute. I mean, you see NVIDIA's market cap. So, but the reality is there is space in the economy. If we believe that there's a world where majority of the GDP is going to be, growing thanks to these machines versus human labor, then that kind of makes sense. But today there's still a big gap between, buying up compute, training models, and actually seeing real workloads.
There's a couple of years ago that people were talking about how Bitcoin's energy consumption was the size of a small country, and the UK is a sixth largest economy in the world. So it's a pretty big economy. I mean, it's not a lot of people, but it's a pretty big economy. I mean, not US
this
size,
is way bigger
size, but number 6 or something like that. And that's just a mind-blowing amount of energy and electricity that is. We should stop basically sending queries, Gaurav, of create a rap battle between, I don't know, MasterCard and
It's
Visa,
not
whatever.
sustainable.
I know
Exactly.
all the other stupid things you can do on ChatGPT or
Too late. The bots are
too late.
cycling program to
Gara's
send.
there, like saying, "Create my next business strategy." Sorry, his investors are watching this. So, Gara, let me kick this over to you. I mean, let's delve into building the business because that's where you come in. That's where your chops are.
I think so. Can you hear me okay?
Yeah, perfect.
We can hear you from
Great.
underwater.
Yeah. I went through my scuba gear. Well, this is crazy. All the size of this opportunity, the size of what's happening is truly colossal. But quantifying what it looks like on a business side is equally interesting for someone like me because you walk into a conversation like this, and a lot of our listeners are probably thinking, where is the business opportunity? Okay, so I think to start with, if you can give us some background on the businesses you've built, you're obviously not a novice or a beginner when it comes to building either business or business and product to monetize. Can you tell us about your journey, about the businesses or products and services or industries that you've worked in previously to this?
Yeah, for sure. I've actually been in the data and machine learning space for a while. I think it'll be 10 years soon, which makes me feel extremely old, unfortunately. But my first thing out of university, we were trying to understand, it was a health tech business, and we were trying to understand early stages of bipolar disorder from phone data. Back in the day, there were completely different challenges. Language models were like very, very basic, NLP, but also like you couldn't do much with the data. Like it became very hard to get the data out of the phone because of GDPR in Europe. And also like Apple was very privacy focused. So that business, we had really nice IP. We were working with Mercer Group, which is part of Oliver Wyman. And we ended up just selling that product as a part of their healthcare platform that they were trying to launch. And after that, I did Entrepreneur First in the UK, which is this sort of accelerator where it's like the YC of Europe. But you can go in there and you don't have to have anything, an idea or a co-founder. You just meet people and then you build stuff. So I did that for a bit. Couldn't find anybody to work with. It's very tough. And then I got into investing because that was like an obvious sort of interim thing. I was interested in AI. Mayor of London's fund had just raised a new sort of amount of money that they wanted to partially deploy into deep tech deals because it was considered to be UK's strategic advantage. And DeepMind obviously started in the UK, huge team on the campus, UCL, the university I went to. So I did that a little bit with London Investment Fund, and then we decided that we only want to do AI deals and do like $300,000 to $500,000 checks, the first check in AI companies that are applied. So invested in about 45 companies across the board. Very interesting spaces actually, and they're doing pretty well right now given the wave from like building factories. So you apply computer vision and language models to KUKA robots, like the big German stuff. We invest in a company like that called AI
This is
Build.
all underlying is data, working a lot of what you touched, what you did for your review, where you put people's feet to the fire before you invested in them, was all very much around data. Okay.
Yes, and the vision like of doing those deals, I guess, like just in general, the belief was there's all of this unique, interesting data in the world, whether like you're optimizing feed for fish farms or doing something with robotics in factories. All that data lives there. So if you can utilize it better, then you can introduce optimizations across like business line and make money. Compared to blockchain, or many other technologies before, like even just software and like the internet, AI is very much, it's not a 0 to 1 technology at all. It's it is an optimization play. It's like, how can I take something that is already done at a certain cost, at a certain pace, and just do it better, faster, cheaper, right? That's the whole idea of it.
And how much of what you saw was directly around finance? Or,
at the time, At the time, a lot of, also because of London, London's a financial hub. So a lot of
Also,
people are building for financial services, like fintech is huge. You had the neobanks that were thriving, the Monzos and Revoluts. The regulator, I think, in the UK is really one of the smartest regulators out there. They got a lot of things wrong that they got right. The FCA is really, really good. And I think that introduced obviously open banking, which means like a lot of open data. So people building opportunities on top of that. So a lot of it was finance, either building tooling for asset managers, and new analytics. Like you name it, leverage finance stuff, like a lot of finance.
so you're looking at all these businesses, you're looking at application of AI, and you're looking at data sets, you're looking at optimization. Where does the aha moment come for Entropy in saying somebody's going to pay me for what I'm doing because there's a problem to solve? Was it many iterations before you built the product? Can you tell us about what you built and what people started paying for? Was it one and the same thing right out the gate, or was it
No, it wasn't.
process?
It was like the whole story of Entropy is I probably need a better PR version, but a lot of it is like not us having good ideas, but us having a lot of bad ideas and then just stumbling because we would insist that they should exist, which is pretty funny. Like as long as you survive long enough, and then sometimes you listen to people, not all the time, you see things that can be monetized. But initially, because of the previous thing I was doing in the healthcare space, I had this thought that financial data, just as healthcare is regulated, is very valuable, but it's not out there used in a better way because, well, obviously privacy. So that was my insight. And it sounds natural, kind of makes sense. So we said, okay, if I can go and create a way for company A to share their data with company B and train models without necessarily seeing the data and privacy concerns, then somebody will pay me for that. And it can have a huge impact because the more data, the better models, better business impact, whether it is like in fraud or recommendations or whatever. When COVID started, Ilya, my co-founder, and I, we just started pinging people across the board saying, oh, like we have this privacy preserving toolkit. This is what you can do. And people were mostly responsive, but nothing would happen. They would say, oh, this is interesting. We really care about privacy, but not right now, or not something that's like top priority. So then we started asking top priority, and they said, okay, like, it would be interesting to get another bank's data, but I can't even use mine because it's locked in different silos, it's in different formats, it's messy. Like I need a way to be able to use that better before I even look at anybody else's. So eventually we gave in and we said, okay, like the real opportunity now that people will pay us for is finding out a scalable way to take all this messy data and making sense of it and sending it back to them. And that's how we created an API, and then we took it was like one of Google's models, BERT. Again, looks like ancient now, it's like top back then. And we said, okay, we need some data to train it on so that it could perform. So we created a web page where we would say, oh, like if you give us transactions that you don't recognize from your credit card, we can tell you who the merchant is just by like literally looking at it as humans. Worked out. There's a load of people that would connect their accounts and then would send us, we would get the data and then we would tell them these are the merchants if they didn't recognize them, or this is what the transaction is about. We had 20,000 transactions that we trained the model on initially. It's a terrible model, but was like it's like a clock, right? Even if it stops, like sometimes it's right. So we started. Yeah, exactly. We started going to companies and offering that. And then the more data they were giving us, the better the model was getting. So obviously, like today, we do north of 200 million transactions monthly. We've seen billions and billions of transactions just on this API that it's very simple. It just takes a bunch of credit card, bank data, cleans, tells you who the merchant is, who the counterparties are, if there's an intermediary, and then attaches like a label.
How many transactions did you say?
Well, this month was 280 million, something like that. It's a lot. Yeah.
What? In which geography?
90% of them are in the United States. Just for context, there's about 4 billion credit card transactions daily in the US. So there's a lot to grow into, obviously. But we have coverage of over 98% of all US merchants. And like we have 100 million unique merchants globally that we've seen. After the US, probably the biggest would be Europe and Latin America. And then, yeah.
So
we
who's
still
paying you for this service, and how are they paying you? I mean, you're doing...
Yeah, banks and fintechs, they are the main sort of users of it. It's consumption based, so you can do it self-serve, or you can talk to us if you want if you have big volumes and want a better deal. But essentially, we charge you per transaction. So the more you send, the more you get charged.
I mean, this sounds like a Klarna type fit or a buy now pay later fit, because fintechs there are very active around data. I know banks and other institutions, but it sounds like fintechs would be your first customers.
They were, and they have been for a while.
Right.
Yeah, exactly, because they're faster moving. They do more innovative things, less risk averse, I guess, around data. So they were our first customers, a lot of large fintechs. And I mean, the 21, 22 wave, they grew massively as well, a lot of them, right? So we started to see the volumes that they were seeing, which is like a natural thing. I mean, I just saw Visa's earnings, and just Visa's, they published their margins. And like, I've always admired the business, because it's like one of those businesses that even if, as long as you keep the lights on, and let's say you didn't have any humans, there were like maybe 10 humans instead of thousands, it would still make money and make those margins. Because it has such a huge advantage, right? Every time money moves from point A to point B, they get a fee.
It's the rails. If you set up the rails on which all the trains operate, and just happen to own the real estate on which the people are selling coffee and everything else, and everything's ticking over, yeah, you don't really need much to do.
Exactly. So my idea with Entropy was, okay, these guys have, like, they are moving money, but they are dumb rails. Sorry, Visa, we want to work with you. You guys are great. But they are sort of dumb rails, right? Because they never cared about the quality of the data. They're starting to care more now, because no matter what, like how good the data is, they still get paid. Like, even if that memo says like a bunch of garbage nobody can interpret, they're still getting paid, because they're being paid for moving money. That's like the top thing. So we were thinking there's a secondary opportunity now to say, okay, but we are also moving information with money, right? Because if I pay Gaurav, there's some information there. I probably am selling a product or service. He's receiving it. For him, it can be revenue or income. For me, it's an expense, right? So there's a lot of valuable information there. And this is what like the economy is built on. So our thought was like, okay, then Visa is going to take their fee, and then we're going to take, a percentage of that for moving the information and making it clear. And that's why it's like a pretty exciting sort of journey we started on. And now as we're doing it, like as a main business, like last year, we just stumbled upon sort of the secondary thing, because we were building infrastructure to support the main APIs. We said, okay, like, are we going to train our own models and continue to do it because it's expensive? You need a lot of machine learning engineers, etc. Or do we believe that language models are going to be commoditized and become better and bigger, and then we need to find ways to use them? So we landed on the second sort of bet. We do believe that they're going to be commoditized. There is no real reason to just go out there and try to outcompete a GPT-4, 5, 6, 7, or an Anthropic with a ton of data and billions of dollars spent on compute. Like, we just cannot afford it. But we can solve another sort of the second biggest problem that's out there in the world, which is like they're not affordable. The better they get, the more expensive the best ones become. So then we sort of need to democratize it. We need to go and take the latest model that can perform on a task, which in our case, it was transaction cleaning and categorization, and try to figure out how to make it cheaper and faster. We need like under 200 milliseconds latency.
So your customer segment then is not tier 1 AAA clients with large budgets and large rails and sort of very slow moving committees and procurement departments and people sitting in boardrooms. You're looking at more definitely more fintechs. If you're trying to democratize cost, you're looking at people that are trying to take advantage.
You would think that. You would think that, but the reality is you start caring about cost, like really caring about cost, if you have scale. This only starts to matter if you have true scale. Before that, all you care about, and I think the world is in a place today, even the bigger companies, where they just want to get something working first. There's this big promise, every CEO is telling their board, we're going to figure out this AI thing, whatever. And then they discover use cases. And then once those use cases are there, they know how to eliminate to a certain degree hallucinations, make it stable, all of that. And the question is, okay, now if I'm a big organization, I have 500,000, I think that was Klarna's number, customer service requests a week or something, right? For example. And how much are they going to cost me if I deploy the best possible model to get the best possible answers? And if you compare it to humans, yes, GPT-4 is cheaper than 700 humans responding to those requests. You would need 700 humans. But in reality, you wouldn't hire 700 people, right? You would just it just would not happen. So to be able to scale this with AI and benefit from it, you need to bring those costs down if you're a big organization. We are targeting those because they have such big volumes of things to process. And if they want to do it truly, across all of their sort of need use cases, customers, employees, whatever they're building, then cost is a concern, speed is a concern, and then obviously it has to be reliable, and so on and so forth.
So you've stumbled upon your first product and service to build. It's picking up, you're scaling it through. You're getting similar clients in the same segment because your technology is proving to be valuable.
Exactly.
Having people access it, it's giving them tangible results on optimization of this data to do it. How are you selling it now is the most important thing that I want to understand, because in the first question, when you first started, you went out and spoke to potential customers. Mm-hmm. And they came back to you and said, this is what we actually want, urgent, top news. You've done all that discovery. Now you need to rush out because you're obviously spending a lot of money continuing to build your business and want to scale it as well, from technology, people, hardware, you've got costs. Is your approach direct or is your approach through other providers? Because, for example, I could see a Silver Lake or somebody else that provides core banking working with you very closely saying, we need to work with you for clients that are migrating from A to B, or clients that want to set up different BAU instances or protective instances. Are you going to be working on a direct to client approach market, or are you going to work through a distributed model to scale faster? Because those companies are not going to build what you're building, right?
Yeah.
And they could see it as a potential way of you securing their business effectively and making their lives easier when they're doing data migration. I mean, core banking data migration takes how long? I mean, to do cleaning up of data and moving things across from pool to pool to lake. With something like Entropy, it could move, I don't know how many X faster. I don't even want to think about it or conjecture. So what is your approach to market now to scale? You're selling a product discovery. Where do you go?
That's a very good question. I think as we... just to make it, I think, because it's a little bit convoluted, we have one product and business that's already working, plus the infrastructure that supports that now that we want to sell as a separate product that has a bit of more sort of mature clientele, which is different from our first fintech customers. When we were selling to fintechs, it was very inbound driven. Everybody knows everybody. We did a lot of marketing content, just, even publishing things on LinkedIn is like a big driver. People would come and sign up and then use the product. And then eventually, if they want to upgrade or something else, you grow that and you have net retention. It's very easy. But there's obviously, even for that business, there's not enough fintechs in the world you can sell to build like a huge company, unfortunately. So you do eventually have to graduate to either service providers or directly to the banks. And selling to big FIs directly is very hard, even if you have a sales motion that's set up, which is pretty expensive. So I think majority of enterprise is going to consume these solutions in a couple of ways. Number one is cloud. the cloud providers, I think this whole wave, and this is my personal bet, but I think it's extremely obvious as well, this whole wave is just going to make the cloud bigger. 10, 20 years ago, we had the cloud move and transformation, and people started moving to the cloud. Now they're there, whether you're getting storage or getting data warehouse solutions and data transformation. And then on top of that, I'm going layer, right? And then you're doing like models, everything. And then on top of that, operations, observability, whatever else, like dashboards to observe how the models are doing, evaluation suites and optimization. All of that should be accessible and will be accessible via clouds because it makes sense. It's secure. They already have those vendors and relationships. And also, it's cheaper end to end for the cloud providers. Plus, they can make better margin the more full stack service they provide, right? What you pay for storage is like nothing compared to what you're going to pay for like a language model output. So for us, like surviving in that world, we're obviously a small company today, be a big company pretty soon, but still like you are a third party clog that needs to go and fit into this institution. So I think that indirect model, actually being a part of the cloud offering, being a part of the other providers who sell into these institutions already is key. So we're just trying to activate that motions. I'm actually hiring somebody who will look after just the 3 cloud providers and then Databricks and Snowflake on the warehousing side, and nurture those relationships. We have a very good relationship with NVIDIA. I think NVIDIA as a platform and ecosystem has so much potential to build not just the training business, but the actual inference business. And they're getting started and they're motivated and they have cash to spend. So for us, like if you're buying GPUs from NVIDIA, which everybody is, and you're a bank, and then they offer you also the containerization and everything to make it faster, like the whole software. I think people underestimate how big of a software play there is in that company. Then great, like you can access Entropy via them as well, and you don't have to think. So those, building out that motion is key for the next stage of the company. I tell my investors that I'd probably be a terrible person to build like a business. Like if I had building like small business is very hard. I think like whether it's an ice cream stand or whatever you're doing, like very, very hard in different ways. But Entropy's not just a business first; it's more like an option to capture this massive, like almost like I have a friend who says it's a call option, right? If you're a VC, you're investing in a call option. So it's a massive call option. You're buying equity in something that's going to compound in the future. So our decisions are partially based, how do we make revenue today? Which is like critical because otherwise you cannot survive. But also, what are the moves that we need to make to compound so I can charge way more tomorrow, or I can have better margins, or nobody else can enter, this opportunity in a similar way. And to think in those dimensions, you really need to be very, very picky on what you get to do today because you're a small company and you have little resources, but also like how are you moving forward in the future and what are the bets that you're making for the future and what are you saying no to? So I think we're now trying to navigate that whole thing, and go-to-market is a big part of it.
I think the last question I want to ask quickly before handing back to Ronit is just about your team. When you're building something this cutting edge and you're building products and it's making a fit, you still have to stay ahead of people. And the pace of change here is going to be frighteningly fast. And you've sort of teased about expecting that to happen, thinking ahead of time of what you do to survive or thrive. The differences, the decision making ahead of time. Mm-hmm. What kind of team have you found in Ntropy? Do you have a co-founder? Do you have someone that's an AI specialist? Do you have, how much of it is the in-house tech team that you've managed to build and source? Because that can't be simple. I mean, if this is such a hot space, must be talent, and building a team can't be can't be a walk in the park. There must be something to it. So I'd love to learn more about that.
Yeah, we're actually very lucky because we got to hire people who were very, very good before it was extremely hot to do this thing, right? So we had we got machine learning engineers, and thanks to my co-founder as well, in his background, he spent over 10 years in ML. His background is theoretical physics. He then worked at ETH Zurich as a professor on the machine learning side. I got a lot of stuff published around optimization specifically, and then spent time at Microsoft Research. So across the board, he's been in the space for a while, looking at ways to use the models. I actually did some quantum before getting into machine learning. First, they were looking at how to build better quantum machines to solve optimization problems. And then he jumped into okay, but how can we actually do it with classical software and classical computers? So he's definitely a huge part of this. A lot of the infrastructure and the technology advantage that we do have is thanks to him and being able to make bold sort of bets in a space that's not very well paved out. The people we hire, we get a lot of people from maths Olympiads, very, very sort of raw, young, who then end up becoming fantastic software engineers. So we've had that track, and it's been great. A lot of University of Edinburgh, Cornell, just a lot of good university sort of students that we can access early before they get the massive meta and other checks. We got to love them, and then we for this next stage, because what we're doing is the aperture of it is so big. We're also targeting and hiring people from companies like Databricks, Snowflake, DeepMind, and so on and so forth, just because you need that sort of arsenal of talent to be able to survive. But it's tough. I think great talent has a lot of options today. So you need to make sure that they can do their best work, and they also believe that they're spending time on something that has huge potential.
It's super interesting. I could go on for another hour asking how you're going to build the business of the future, but I think we've got limited time. So, Ronit, I'm going to throw it back to you. Thanks so much, Nare.
Thank you.
Sure. Just to wrap up, Nare, we've been since probably November 2022, a hype cycle, maybe the effervescent part of the cycle. And the much used Gartner hype cycle diagram. And when, if ever, do we slip into the trough of disillusionment? When do we get into the I've been sold Gen AI by the consultants, by the commentators, maybe by my own team, but it's just not doing what I thought it would do, or it's not there yet, or it's too expensive. And so just talk about where we are in the cycle. Are we still in the kind of wow stage? Are we in the how do I use this now, please? Or the oh no, oh my, I don't know. Or the ow stage. I made that up. I'm just making some of this up, by the way. The one of my colleagues came up with how from wow to ow. And I was just thinking, are we gonna go into the ow stage at some point soon? Because it's not AI specific, right? All technologies do this. So
true. I actually think it's a human nature thing, because things that seem very magical to us become very normal very quickly. That's just one. I want to say that I think the overall moment and opportunity in software, despite all these crazy numbers and spend and everything we said, is I would say even underrated. It's and you feel that if you have been in the space for a while, because you know what was possible and where we were and what is possible today and how big the leap has been. We still haven't scratched the surface of what we can do with more compute. What if we go even crazier? So all of that is happening. There's constantly new things coming out. There's a little bit of fatigue around that too, because eventually, if unless every time something new comes out, the leap is big enough, people they don't even have resources to try enough things out, right? Because there's so much stuff. How many new model can you actually benchmark and be excited about, etc. I think we are at a maturing stage of saying, okay, this is massive. It's currently happening. The models are going to get better. At what pace? maybe slower than they were 2022, 23. Like everybody's betting on GPT-5 being like a massive big thing, but it hasn't happened yet, right? But how do we actually take this improvement that we've seen already, because we haven't banked on it at all, right? Even if nothing else changes, being able to use the current sort of intelligence and reasoning capabilities of those models, we haven't done that yet across economies. So that needs to happen. So we're in that moment, okay, how are we going to make this happen? Which areas is it going to happen in first? What are the resources? What are the shortcomings? These are probabilistic systems. It's very different than building on general software. So you have to figure out a lot of things as you go, you know. So that maturity is starting to happen. As it happens, there's more disillusionment because you're not like wowed every time. You're like, okay, now I see the mistakes, or I know where it doesn't work, or these are the workarounds I have to build because I can't pay that much money, or I need something very specific that answers my questions. I don't need a model that performs best at like all possible benchmarks and does the high school tests. And, you know, like it's not going to be enough. All those things that people market and stuff, it's not going to be enough. Everybody's going to test you and want to know how you do on their specific stuff. It's a good time. It's time to really build and double down on that. I think we're going to see a one-off insane valuations that are happening. Like yesterday, I saw like the software engineering agent startup, Devin. I think they're 6 months old, zero revenue, 2 billion valuation. And there's already like an open source version of them, and the founders are impressive, but there's like an fully open source version that somebody else just cooked off and it's working. So that stuff will happen. And, but in general, things are maturing, you know, some illusions will die out. We start to think about economics, which is why I'm excited actually, because when people start asking questions about economics, that's where we want to be as a company. And I think we can help provide some of those answers, you know, how to make this economically viable.
And maybe my last question to wrap up, because we're running out of time. As we sort of look ahead and you're trying to, as a company, as a startup or a big company, use AI Gen AI most effectively, is there like a checklist you'd give a user, whether it's at an FI or a corporate? How should I think about using this in practice in 2024, 2025?
Yeah. I think number one thing that needs to happen when you talk about strategy is doing a big workshop on the areas of the business that they think thinking about it in terms of optimization, this optimization is applicable. And there's two ways you can do it. One is you can do it internally to add operational efficacy if you're an FI, right? So you can think about every single department you have, from marketing to sales to risk and so on. And you can say internally, with my employees and workflows they have, how do they manage these things? Is there a way to make it better and gain some efficiency there? In that scenario, you're in a bit of a safe space because you're doing internal experiments. Your customers don't depend on it. You don't have regulatory pressure as much as if you were pushing something out externally. You're familiar with the data, you're familiar with the workflow. So you have to do a lot of cleaning up the house and then seeing if you can make this work to make your people better and more efficient. It's not very different from RPA and all the stuff that happened sort of earlier, just sort of next version of that, right? Because people have been trying to do automation for a while. It's just way more flexible automation. So that's like number one. I would go internal business functions review, because also you'll build some intuition on what's possible and what's not possible. And then secondly, just evaluate the tooling, you know, what you have access to. There's obviously the big model companies, the top ones that everybody probably has access to through their cloud providers. So everyone does a small experiment, picks a set of models, builds some redundancy so that if one model fails, you have a fallback to another model, and then runs it, and then evaluates and it goes back again. To do this, you do unfortunately today it's very raw. So you have to extensively build a lot of in-house things, right? Even to take an output and say, okay, is this good or not? Validate it, send it back, do feedback loops, prompts, that will work on your use case, like the whole prompt engineering space, and going from one prompt to another, saving it. You have to build all of those layers, or go to a provider that will give you out of package. Still very early days. So I think there's a lot to build. Once you've evaluated the need and external or internal, and you're going to use these models and they're applicable, then you have to think about, am I going to invest my engineering hours? Do I have the right talent to start? It's not just pinging a model, right? To have everything I need to make sure they're working. Or am I going to go and pick a couple of vendors and maybe start with them and then learn with them and for them, with them how to make this work. Those are expensive decisions, tough decisions. I would do internal first and then go external. Because if you have an LLM underwriting a personal loan, it going off and doing something random has a lot more implications than having helping your compliance team internally shift through documents faster and mark them and classify them. Both are very serious problems and cost a lot, but the implications are different.
And just maybe one last question. The TAM, this mythical, you said it's probably bigger than we think the market is. And I know it's hard to put numbers on it, but I'm going to put you on the spot and say, you're doing your VC pitch or something.
Okay, exactly.
Want to throw a TAM out there. How big is this? How big are we talking about? I mean, and you can't say the whole world economy or something like that.
Can we do a drum roll? Do we have
the interstellar economy?
It's so hard. That's the future, a certain percentage of the future economy.
Maybe another way to think about it is it's 2025. How big is the market? It is 2030, like 5 years after that. Just to give us actually, I'm just making your question even harder now. But how big is this and how fast is this growing?
I think I'm going to say some numbers because I'm in that mode and talking to obviously VCs and others. But I think the first thing is just framing how we think about it, right? As it's very hard to assign numbers to a future opportunity. And the way we think about it as a future opportunity is the following. There's global GDP today is powered by human labor at mass, right? That's we have human labor that generates dollars in the end. As models become smarter, you can get similar results for way cheaper. So now all the humans you have and human labor goes either doing in more complex things or just doing more. So you have sort of the market expanding in that way, right? Because if there's a certain resource that's not being that now can be used more efficiently, that resource can be utilized to do more things. That always happens with any technology. People think about, everybody will lose their jobs, etc. But in reality, people just get to learn to do more things. So one side of it, if you think about it, just if we make human labor more efficient, then we will get to do more and the economy will grow and there's that opportunity. Another way it's growing in another direction is these models are becoming smarter. So they're also able to do more and more complex things that weren't possible before. So you think about tasks today that even humans cannot do because either they're too expensive or they take too much time or they're just prohibitive for a certain reason. And then, the economy obviously grows from that too. Whether it is, doing experiments in fusion or the DNA space or any science is the most obvious, but any other area where it's very expensive today, tasks are very complex, iteration cycles are slow, you accelerate that and then the market grows in that way. So it's both sort of the bottom expands, the top expands. That's why people are assigning trillions of dollars of opportunity to it. But it's going to take time, I think. And processes.
Trillions?
Well, that's it today. I mean, look, if you spend if you spend 50 billion in capex on AI, you need to expect that, right? There's no, like, otherwise you're just spending silly money. Like, if you don't bet on a version of the world that's going to be that big, then it's silly money and it will never be justified and you're just burning it. And this is what I say to our investors when I was thinking about Entropy's TAM and opportunity, because the way we're going to charge people is you call an LLM to do a task, we intercept it, this performs it, it's cheaper for you, but then we take a cut in that, right? So how do you think about the TAM? I do simple things. I think, okay, like how many very simple machine learning tasks in finance, named entity recognition. It's like you literally take a document, any type of document, or any type of file or row or whatever, and you extract who are the entities. You do this in onboarding when you're trying to figure out in KYC, you know, who's Gaurav, etc., from his passport. You do this when you classify transactions to give you a loan. You do this when you're responding to a regulator request. You always have to take those entities. It's like a very simple task. Humans are good at it, but there's just not enough humans to perform those tasks. So like it's very hard to do at a scale. LLMs are great at it. 10% of financial services sort of tasks today are just that, literally taking an entity out of somewhere and figuring out who that entity is. That market today is 3 to 4 billion, estimated to be like 8 billion. Just that. Like I take a very, very simple. So like now you assign, you know, how many things like that exist there that can be taken over by these models, right? Then you take another simple task. Like I'm not even talking about like a full, oh, we're going to replace a human salesperson. I'm going like into subtask level. Like we can take small subtask and assign a TAM to it and then combine all of those subtasks and then see what the further opportunity is. Classification is another $2 billion task, like literally taking something and putting it into buckets. This is, I don't know, a request about card denials. And this is a potential first-party prod request when somebody calls a call center. And this is something else, the else bucket. To be able to do that, you need a ton of humans, just like that simple task, not even like writing rap or generating like beautiful answers. And there's like a huge TAM attached to that. So I think these things like that are extremely boring, all of the subtasks, even if we just do that, we are talking about, you know, very large numbers. I think for Entropy, I have a 10-year business model that maybe looks a bit ridiculous, but it just shows the thinking, like, how do you build a $100 billion opportunity out of this? Because if you can't, then this compute spend and all this buzz is just not worth it. And we're all going to be very sour. Yeah, hopefully not. But that's basically, yeah. If either you bet on that version of the world or you don't, and if you don't, that's fine. But if you do, then it all should sort of make perfect sense.
Nare, we could chat forever. I think we need a part 2 of this discussion.
I know we do.
We do. Let's do
it was
that.
really fun.
Let's do that when you're in Dubai.
Yes.
Yeah, I'm actually there 24th of May. I'm going to be in Dubai for the week, and then I'm going to Riyadh for 2 days and back. So we should definitely catch up if you guys are there.
We'll definitely catch up in Dubai. Thank you so much for joining us today. It's been a pleasure hosting you.
Thank
Awesome.
you, Nare.
Good meeting you.
Thank you.